For me, and by the way, I think, obviously the different members of the committee take different views, as you can see. For me, it actually wasn't a specific new piece of information, really, that changed things. It was actually confirmation of really what we've been looking for, which is further evidence to support the view that we've taken, that while we're seeing persistence in inflation effects, that persistence is rather less than we feared it would be, and that it seems to be, moving along in the right direction. So, we're seeing things like services inflation and, wage numbers come down quite gradually, but they are coming down progressively. And it was really further confirmation of that trend. Now, we're going to have to continue to watch this very carefully, by the way, because there's a way to go yet, quite a way to go yet. But that was the thing that, so it wasn't a new piece of information that changed things. It was more in the sort of sense of confirming a sort of a direction of travel.
And I think you're typifying it today. Rather than a cut, it's a reduction in the restrictiveness. That may seem a subtle difference, but is that what you're trying to say today?
That's a good way of putting it. Obviously, it is a cut, but you're right. To actually characterise it, I think, as a reduction in restrictiveness is a good way of expressing it, yes.
Yeah. In terms of the key factors, we mentioned a couple of times in the press conference the two bête noirs that you've worried about mostly, service sector inflation and average wages. They are stubbornly high. They both have a high five handle still. Are you satisfied that we are making significant progress on both of those previously key measures?
Well, I think what we're seeing is, as you said, a gradual sort of path down of those things. Particularly on the wage front, we've seen nothing to surprise us relative to the view, for instance, we took 3 months ago in the previous report. Services has been a bit higher, goods has been a bit lower. They've basically offset each other, so headline inflation's come out where we thought it would be. Have to keep watching, but we have to keep watching these things to see the path continue in the right direction. Our agents around the country, for instance, on wages, are saying they still see all the firms they talk to are saying, look, the path is downwards. We see that in our decision maker panel survey. The path is downwards, but it is a very gradual one.
And the risks on the inflation front that are going to keep you more hawkish for the rest of the year. I think you were making the point today as well that they've changed from being external factors, i.e. supply side risks from the Middle East, from China, actually to being domestic demand side factors.
Yes. I think the big external shocks that we've been through, COVID, Ukraine, by the way, of course, that must be clear, sadly the events in Ukraine are very tragically going on, but the economic effects of them are working their way through. The events in the Middle East are tragic, but they haven't, as I was saying in the press conference, they haven't had the sort of economic effects that we feared they might, and indeed in history similar things did do. So you're right that there's been a shift from sort of external events and the impact on inflation to what you might call this sort of persistence, the second round effect, which is more domestic, yeah.
But when I look at the persistence of domestic inflation drivers, and I add to that what you were saying about your agents, and I read what your agents have been saying as well, that actually business investment growth is looking solid, potentially picking up as well. There are signs that the housing market is picking up again, that real incomes are going to relate to real spending increases as well, as we see improvements there. Plus the fact we talk about the public sector pay rise. Well, everything to me is pointing to a very, very slow pace of rate cuts from here on in.
Well, I was very careful today to say I'm not going to make predictions on the path or indeed when what we'll do next. I think the direction of travel is, to my mind, pretty clear in terms of, I hope we'll be in a position to see that restrictiveness come out over time. But I'm not going to make any predictions about speed or timing.
Having said that, are you comfortable with where the market is pricing in forward interest rates at the moment via the swaps market and elsewhere?
Well, again, I'm never going to say, endorse or not the market curve. We obviously base our forecast on the market curve, actually.
Yeah.
I think it's a reasonable position to be in. You can probably see from our forecast that actually, if you take one slightly more benign view of the world, which is actually our modal forecast, it's our most likely forecast, then actually, inflation somewhat undershoots actually at the sort of horizon. But we also set out this alternative view, which has got more risk in it, more upside to inflation in it, and that can come out much nearer to target.
Governor, when I spoke to the Chancellor on Friday, she said she had some very nice conversations with you in Brazil, by the way, but she was adamant that her actions are not necessarily going to affect your actions. And you've been adamant today that you are in charge of monetary policy and you will just see what happens on the fiscal front. But the marriage between the two, you both seem very loath to encroach on each other's territory, due, I'm sure, to the independence of the central bank. But are you concerned about the actions in the October budget, which will be fed into your next MPR as well? Risks on both sides of the ledger?
Well, I think the Chancellor's set out her position very clearly, actually. I think, I think we want to give her the space to do the work that has to be done. I know it's having observed a number of these processes, it's going to be a very intense process now from now to October the 30th when the budget happens. There's a lot of work to do. And that's why, as I said in the press conference, we're not going to reach a judgment on whatever comes out in October the 30th until we see it, frankly. That's the right thing to do. We always condition on announced government policies, and that's what we will do.
My final question, you've just piqued my interest. You've seen a lot of chancellors in the last couple of years. I mean, let's be honest about it, way more than you perhaps would have liked to see for economic stability as well. You made a nod to actually how confident you were in what Jeremy Hunt was saying previously, and actually you're quite confident about Rachel Reeves as well. But in terms of how this government started as well, as a neutral observer of what they're doing as well, do you think they are giving the UK economy the stability it has so sorely needed?
Well, I was very clear, actually, because I had a very, very good working relationship with Jeremy Hunt. Very much enjoyed working with him. He came in a difficult time, and I think brought stability into the system as well. So I think we should thank Jeremy for that, because I certainly do.
Yeah.
For his calming presence. So I don't want to suggest that there's been a sort of an abrupt change actually at the point of the election. We have a very strong working relationship with the Treasury, very strong working relationship with Rachel, as I did with Jeremy.
Yeah.